if a bank fails in silver, fails to deliver, the systemic reaction, the contagion would spiral through everything, because they're not just bullion banks. They're banks that have their fingers in all of the other financial pies. The same thing is true here, and that you see one of these banks and you start to see problems with commercial loans. Not only that, you have what's called credit default swaps, where in essence, you're buying insurance against this stuff. And this is why AIG had to get bailed out. If it gets bad enough and you start to see big banks fail because of, bankruptcies, which are non-recourse in commercial real estate, and you just see this cascading effect. Now, we haven't seen it yet, but logic would dictate that we might, right? Who's going back to the office? And it's the opposite of that.
Andy Schectman has been sounding the alarm for months, warning that demand for physical gold and silver has reached levels unlike anything seen in modern history. He describes the current market as being in uncharted territory, where both institutional and retail buyers are chasing limited supply at a pace the industry can barely sustain. According to Andy Schectman, what's happening now is not simply a speculative rush or a short-term reaction to headlines. It's a global migration of wealth, a flight from paper promises to tangible assets, as people begin to sense that the financial system no longer offers safety. The surge in physical demand is not being driven by hype, but by deep and growing distrust in traditional banking and government-backed money. He notes that the world's largest mints and refiners are struggling to keep up with orders, and premiums on physical silver, in particular, have reached historic highs. What's even more striking, Schectman explains, is that this shortage isn't limited to retail coins and bars. It's affecting wholesale and institutional supply as well. Sovereign mints in North America and Europe are months behind on deliveries, and major distributors are running inventories close to zero. At the same time, central banks continue to accumulate gold at record levels, competing directly with private investors for the same limited pool of physical metal. The result is a supply chain stretched to its limits, revealing just how little real metal underpins the massive paper market that has dominated precious metals trading for decades. Schectman emphasizes that the driving force behind this demand is a growing recognition that trust in the current system is breaking down. Years of currency debasement, expanding government debt, and geopolitical uncertainty have pushed investors to seek protection in assets that cannot be printed or manipulated. He believes that the new generation of buyers understands this reality more clearly than ever. People aren't buying gold and silver as speculative trades. They're buying them as lifeboats in a storm. Before we dive into the interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
The scary part about all of this is that now these banks are pawning off their risky mortgage-backed securities instead of the safe treasuries. That is the sign of stress. That is what should be disconcerting. This is why the Fed injected almost $9 billion and opened up a $490+ billion emergency facility. Shh, don't tell anyone. No one knows about it. It's $500 billion. And you don't do that unless something is beginning to fracture underneath the seams. And this is what we said would happen. And that's the part, that's why I'm so fond of the little by little, the logarithmic decay, because the little by little, these things that have been breaking little by little under the seams, instant gratification, even in information and in thought process, isn't quick enough for most people in this country. They aren't able to understand that these things take time. At this level, it is an ocean liner trying to turn. These are very big deals, and they're not getting fixed organically. And the problems with commercial real estate are only going to get worse, as are the problems with residential real estate. The only way the residential real estate problem gets better is for prices to go down and or for interest rates to go higher, not lower. That's what got us in this problem to begin with. Well, the commercial real estate is a whole nother animal altogether. You got all of these companies that realize, well, we're just as productive working away from the office as we are in the office. So why spend all the money? And it's creating a real problem. The banks are not out of the weeds yet. And when you see the Fed coming in and quietly doing this without, again, our media just is pathetic. Our media, guys like John Rubino, God bless them, guys like you, all the people who are telling the truth and getting the real information out, these are the ones that were were shadow banned during the previous administration for misinformation that turned out to be true. But here again, where is the journalistic integrity? Where are the news media outlets talking about what is exactly happening? And what it means is the banks are in trouble. And not only that, no one wants to leave their money in the bank. They'd rather move it to treasuries, which short-term treasuries with disintermediating the bank, or even into money markets away from the regional banks and into the bigger banks. The problems are not done yet. And this is a good sign of it. When they are trading their mortgage-backed securities instead of their treasuries, they're in need for cash and cash quick, and they're in trouble. It's kind of like, you're pawning off your wedding ring at this point, and hopefully you'll lend it to the pawn shop. Hopefully you'll buy it back because your other assets are already gone. And it's a very scary sign, to be honest with you. Not really law, but math you can't run from. And these things always manifest themselves somehow, some way, usually way later than we ever think. But these are the things that we have been saying for a long time, and guys like Alistair who have been saying, and the Western elite have had a very, very magnificent ability to keep the ball up in the air through all sorts of gimmicks and tricks, accounting tricks, injections of money, lying about the measurements of inflation and employment, and on and on and on, right? But at some point, Mother Nature says, well, you know what, your time is up. And at one of these moments when we least expect it, you will see a problem with a major bank. The systemic nature of it. We could look at the problems at the LBMA as an example. All we keep doing is focusing on the LBMA and what happens if there is a silver failure to deliver by one of these massive banks. These are all commercial banks. Well, if a bank fails in silver, fails to deliver, the systemic reaction, the contagion would spiral through everything, because they're not just bullion banks. They're banks that have their fingers in all of the other financial pies. The same thing is true here, and that you see one of these banks and you start to see problems with commercial loans. Not only that, you have what's called credit default swaps, where in essence, you're buying insurance against this stuff. And this is why AIG had to get bailed out. If it gets bad enough and you start to see big banks fail because of, bankruptcies, which are non-recourse in commercial real estate, and you just see this cascading effect. Now, we haven't seen it yet, but logic would dictate that we might, right? Who's going back to the office? And it's the opposite of that. Who knows where this leads? And this is when you see people start to pull out of regional banks, and the regional banks are the ones in big trouble, in my opinion, because of this exposure. So, yeah, I think that this is why you see assets like gold and silver and cryptocurrencies like Bitcoin being purchased, because people are trying to get away from the potential for a systemic contagion that's out there. And this is a good example of how it could happen. And if the Fed wasn't concerned about it, well, they'd be a little bit more open about it. The fact that they're so hush-hush reminds me of the FDIC saying, well, if the public really knew, they'd freak out. Remember, we showed that video a year or two ago. It's the same thing, and it's just more of the same thing. That's why people like you, I always say it, are more of a real source of information and news than the media, which is more about divisiveness and entertainment, if you want to call it that. It's not about understanding what's really happening. And John, Rubino, and Alistair, they're spot on. This is a problem that has not yet resolved itself, not even close.
He also warns that silver's situation is even more critical than gold's. Industrial demand for silver from solar panels, electronics, and electric vehicles has skyrocketed at the same time that investment demand has exploded. Mines are struggling to keep pace, and with years of underinvestment in exploration and production, there's little chance of a quick recovery in supply. Andy Schectman has repeatedly pointed out that above-ground silver inventories are now at multi-decade lows, and much of what remains is locked away by long-term holders who have no intention of selling at current prices. This creates the perfect setup for a structural shortage that could send silver prices into uncharted territory once the market realizes there's simply not enough physical metal to meet global demand. As the pressure builds, Schectman foresees a moment when the paper markets that have long controlled precious metals pricing will fracture under their own weight. Futures exchanges and bullion banks, which rely on confidence rather than full physical backing, could face delivery failures or forced cash settlements once large players demand actual metal instead of paper substitutes. This would expose the vast imbalance between real-world supply and leveraged paper claims, potentially triggering a global repricing of both gold and silver. When that happens, he believes, those holding physical metal will find themselves in a position of unprecedented strength, while those relying on paper exposure could be left with nothing but promises.
I remember laying on my floor 1977, 78. I was 7 or 8 years old, born in 1970. And I remember having this big booklet that came inside of a record album, War of the Worlds, H.G. Wells, and being terrified of it, listening to it over and over again and thinking it was so cool. And my dad said, when that happened, people were like literally jumping out of buildings. They had thought the world was being taken over. Now, that was one thing when information back in the 30s wasn't as readily available as it is now. But I think the more things change, the more they stay the same. I'm in a fantasy football league, and we've been friends since high school. These guys have been doing it for 40 years almost, and 35 years. And a friend of mine in the league took a picture of two of the guys in the league and made them look like they were making out together. It was the realest, most frightening thing you've ever seen. They were at a bar together, having a drink and waving, and the next thing you know, you push play and they stand up and they start kissing, which wasn't true. It was all AI. It said AI at the top. It's terrifying how real it looked. My podcast, one of the podcasts I did with Kevin Hauser while in, not yours, but the one I did with Mark Z, while I was in Aruba, someone, I've done 5,000 or 6,000 podcasts since 2019, as have you, but there's 30 or 40,000 of them out there, as are of yours. So people will take our snippets from our podcast, they'll put their own words and images in and music, and then they'll do it to monetize their channel, clickbait, right? Well, and it really this one made me mad. And normally they don't. I don't know who these people are. Normally they're flattering. They're using my stuff to have people come and watch their shows. But this one said something like, silver's dire prediction, what happened? And I didn't even come anywhere near saying what the silver price was going to do. Was on Friday after the price collapsed a little bit, making it seem like Andy Schectman says it's all going to collapse, it's all over. That aggravated me. But the point of it is that there's deception everywhere. There's deception in AI, which is only getting more sophisticated. There's deception on social media, which again is in many cases I'm okay with because it's getting the message out in a flattering way. They never asked my permission, but that one made me mad. I don't know who these people are. When we talk about, the Warren Buffett thing, you can easily blow it away. Since we've left the gold standard, gold has outperformed every traditional asset. It's not even close. Since 1971, it's not even close. And that's not even worth talking about it. And traditions of central banks prior to 2017 for many years, like 2008 through, or for sure 2011 through 2016, they were net sellers of gold. Most central banks are net sellers. The United States has been a net exporter of gold, and all of a sudden we're the biggest importer. But I'll say it this way, as do you, every week when I do these shows, I need to prepare, and I spend 2-3 hours a day, pretty much 6 for sure, sometimes 7 days a week, studying. And every story that I find that I want to talk about, I will try my damnedest to validate it everywhere else, running it through Google, running it through various forms of AI, searching for other stories, other validations, because there's a lot of misinformation out there, even through, people's best intentions. But something like that is anything but best intention. And, you have to wonder what the motivation is. And here again, shame on YouTube for letting this stuff out there. They were so quick to put a strike against you and remove your video for saying the wrong thing during the previous administration, which was just actually proven to be mostly true. Yet this kind of stuff, which is far more damaging on many levels and deceptive, intentionally gets the green pass. Aggravates the heck out of me, to say the least. But what I would say is it's very important for people to fact check and do their own due diligence. Don't listen to what I say or you say and take it as gospel. I do my best to make sure that it is real, because you put your name out there as often as you and I do, we'd look like idiots real fast, and no one would want to listen to us. So we both try real hard to say the right thing. But no matter where you're getting information, do your best to fact check it, do your own due diligence. A little bit extra won't hurt. Stuff like that's very damaging. And just the two comments you made, no, the central banks don't do it as tradition. They're doing it now for the first time, maybe ever, where in coordination, they're massively buying it. And in terms of, S&P outperforming, you can go back to August of 71 and look forward. You can go back to the beginning of 2020, 2000 and look forward. You go back to the last 5 years and look forward. The S&P 500 has not outperformed gold. In fact, it's quite the opposite. So I don't know what else was said in that stupid video, but it's aggravating that the platform doesn't shut it down the way they tried to shut down all of us for trying to do the right thing for 3 years. Well, they should have put a couple cans of Pepsi in there to give us a clue that it was all a bunch of nonsense. But hey, I think the bottom line is this, Dunnigan, and I'm dead serious about this. The sophistication, the level of sophistication of people out there that are trying to do the wrong thing is pretty high. And as a business owner, I see this every day with our website, with just a million different things, phishing emails, people trying to scam everyone and everything. So it's never been more important in a world that is information is like that we still have a little bit of our own critical thinking and do our best to validate it on our own through due diligence, the things that we think are worthy enough of making or taking action on. Like people say, maybe I should sell my gold because Warren says so. Well, maybe you should make sure that what Warren is saying is true first before you take that step.
Looking ahead, the surge in physical gold and silver demand is likely to mark the beginning of a profound global financial transformation. As trust in fiat, currencies and complex paper assets continues to erode, more investors, institutions, and even governments may pivot toward tangible stores of value. This shift could accelerate a worldwide repricing of real assets, where physical metal becomes the cornerstone of stability in an increasingly unstable monetary landscape. The coming years may see traditional financial instruments lose relevance as nations seek to anchor their reserves in gold and silver, leading to a silent but powerful restructuring of global wealth. This evolution won't just change prices, it will redefine how value, security, and ownership are understood. As paper systems buckle under the weight of debt and inflation, the movement toward hard assets could create a two-tier world, one still clinging to fiat promises and another built on real collateral. In this new paradigm, gold and silver would no longer be viewed merely as hedges, but as the foundation of a post-fiat era. The implications are immense, a once-in-a-lifetime realignment of the financial system, where those holding physical assets stand not just protected, but positioned at the forefront of the next monetary chapter. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.